Hi viewers, and welcome back to Dukascopy TV. I'm Natalie MacDonald. Joining me in the studio now is Anuj Ghosh of Guardian Wealth Management. Anuj, thank you very much for popping in today.
No problem.
Now we're kind of going to be looking at New Year's resolution investment almost, and the new year could see sort of new investment resolutions amongst clients. What client trends have you noted this year? And also looking ahead, what do you foresee clients wanting from their money other than to have more of it?
Of course. Well, I suppose, last year what we noticed was that a lot of our clients were moving away from cash and moving back into the equity markets. And there's a couple of reasons why we think that has happened. First reason is that, I don't know whether you keep your money in the bank, but the banks have been not really offering very good returns. So our clients' money has been eroding away with inflation. So what we found is that now a lot of clients have been moving back into the equity markets. The FTSE has actually returned around about 10% this year, so it's a lot better than what the banks are giving. Also, we try and also encourage our clients to look more to the medium to long term rather than just the short term. So when you're looking at longer term goals, we know that equity markets are always going to perform or outperform the banks. So last year, we noticed that a lot of our clients were moving away from cash and back into the market. So the confidence back in equities seems to be there for last year. And I think that's going to continue into the next year as well. So our aim really is to see all our clients, as many as possible, and get them back out of the banks and back into the equity markets.
Now, concentrating on your clientele, obviously you provide services to young professionals, to families, people who have sort of diverse priorities really. What are the differing priorities of those different groups?
Well, yeah, you're right. We deal with people of all different backgrounds and of different age groups, and so they all have different objectives. Now, when you're looking at young professionals, people who are just starting out in their careers, they tend to look at more wealth creation or wealth accumulation, and that can be over a medium to long term. So it's just saving on a regular basis so that they can save money at a point in time, so they can then look at having the choice to give up work at some point. So creating wealth over a period of time tends to be what their objectives are. Families, people who've got young children and so on, their objectives are slightly different. So they're looking more towards protection, that sort of thing, making sure that they've got adequate life cover built into their portfolios, meaning that if anything happens, then their families are protected. Also, things like school fees planning is a big objective for them, so making sure that when the time comes, they're not going to get stuck with having to pay for expensive school fees, university fees and so on. So they tend to have different objectives. You've then got the older generation, people who are closer to retirement, a bit like myself. They're then looking more for security of what they've already built up, make sure that they're not then exposed to the sudden changes in the volatility in the equity markets. So yeah, we've got different objectives for different people, and it's just really about structuring their portfolios accordingly.
How do you act to meet those needs then in terms of cash flow modelling, if we consider sort of various, perhaps portfolio diversification, risk management to meet those needs?
Well, before we give any advice or make any recommendations to our clients, what we always do is run through a comprehensive financial planning questionnaire. And what that involves really is trying to establish what our clients' goals and objectives are in the first place. So whether it is short-term retirement or long-term retirement planning or short-term asset and portfolio management, we'll make sure we do that in the first place. So that involves really looking at their current situation. It involves also looking at what their income is, their expenditure is, what their surplus income is, and then really trying to model everything around their exact situation. So we'll look at their goals and objectives, look at what financial planning they've already put in place, and then really establish where their potential shortfalls are, so where they need extra work to be done. Our job then is really to advise them of what needs to be done and set up exactly the right solutions for them. We also get our clients, before we will set up the solution, to complete an attitude to risk questionnaire, which is quite structured, and then we can really establish what their risk profile is, and then set up the portfolio accordingly. That way, then we know that we're going to be able to meet their exact goals and objectives.
Which of these client groups then do you think could potentially be most at risk perhaps in the next calendar year and really could need that sort of advice and structuring?
I suppose when you're talking about risk, then it's going to be the clients who are closer to retirement, okay, the older clients. So if you've got less time to retirement, then you don't want to be exposed too much to market volatility for obvious reasons. So they're looking more for value protection, they're looking for protection of their capital. So in those instances, we will look at probably non-equity based investments, investments that are going to give more of an income with very little risk. Okay, we don't want to really keep their money in cash though, because the returns aren't going to be there and their money will still erode away with inflation. So we're looking at investments that are going to protect their capital but also not really reduce the returns that they're going to get. So generating income tends to be what we'll look at for them. But if you're asking the question who's at most risk, then yeah, the older generation.
Anuj, thank you very much for coming in and sharing your expertise with us today. Thank you.
That's okay.
That's all we've got time for right now, but don't go away. We'll be back shortly with another exclusive interview for you. Goodbye for now.